misunderstood. People, you know, you say counterparty to some people and they look at you blankly, but I mean, it's absolutely essential that you not have counterparty risk, because there's so many weak entities in the world today that your counterparty might be one of them.
Yeah, absolutely. You know, during a financial bust, promises are broken, and you don't get to the end of that financial bust until, you know, the promises that cannot be fulfilled, all of those promises end up being broken. I think we have a lot more promises to be broken, so you really want to own something that isn't reliant on someone else's promise.
Well, I tell you, that certainly gets brought home to me whenever I listen to Jim Sinclair, who I think really has a deep understanding of the malign impact of the derivatives in our system, and the fact that he believes they've changed the definition of how they say how many there are, but under the old definition, there's more than $2 quadrillion worth of them. I mean, those numbers, I mean, I have a trouble with trillions, let alone 1,000 trillions.
Yeah.
So the system's polluted with this stuff, and so I think you have to be in real assets that can protect yourself from what is going to ultimately happen in the financial side of the equation.
Yeah. Just turning to the currencies for a minute, you know, is there any currency out there that you like? Not
really. I mean, obviously the favorites these days is the Swiss franc, the Canadian dollar, and the Aussie. You know, I can speak reasonably intelligently about the Canadian dollar because I live there. Mm-hmm. And you tend to see the warts in something that you're closer to, I will admit. But I mean, Canada is not without its problems, particularly in the eastern part of the country where I live. Mm-hmm. We do have a wonderful resource base, and we do have a small population. Our debt situation isn't as good as people think it is, because a lot of it's been pushed down to the provincial level. Do not look closely at the province of Ontario's financials, or you will be very uncomfortable.
Yeah, it's the weakest link in the chain there.
Yeah, and Quebec's no better. So I mean, so these big eastern provinces, which are where most of the people live, have some pretty tough economic and financial statistics if you look closely.
Yeah.
But having said all of that, it's still better than the US dollar, but at the same time, because we trade, about 80% of our trade goes north-south, and we've risen from 62 cents to $1.03, I think, or $1.02 yesterday. I mean, we just don't have that kind of flexibility in our cost base to sort of absorb that. So naturally, outside of our resource-based industries, most of our manufacturing and that's been really hollowed out.
Is it a depression in places like Windsor?
Yeah, it's terrible in certain places. And I think if it weren't for all the government spending and there's still people are lending the money in Ontario, I think the Ontario economy could look really questionable.
Yeah, but that spending is coming from debt. It's, you know,
it's totally
not savings.
No.
Or, and
that was why I said just before I was at Alistair MacLeod's discussion at the conference when he was talking about the real theoretical basis for, you know, why we're going through what we're going. Because he's a true Austrian economist, which I totally support. And when you sort of lay it out as clearly as he did, there's no outcome that's very positive here. We're going to just have to go through it and clean it out and start over again.
Yeah. Let's turn to the mining stocks a little bit. You know, it's been a big topic of discussion here at the GATA conference. How do you see it at the moment?
Well, I have been of the mind for some time that the mining stocks have been the victim of a computer algorithm program, and that basically the same guys that have manipulated the gold price have sort of moved into the stocks in a big way, all with the idea of discouraging the public from participation. And it's working. Mm-hmm. I mean, there's very little buying amongst the public now because you're just getting their heads kicked in most of these stocks. And it's totally counterintuitive. The price keeps going up. The gold stocks and silver stocks are under pressure in most cases. But how I see it ending is that when we get the inevitable breakout to the upside in the gold and silver prices, like big breakouts, that's going to sort of get rid of all this negative sentiment about the fact that we're in a topping phase or we're in a bubble. And at that point, the stocks, I think maybe on one other occasion at the bottom of the liquidity crisis in 08, they might have been cheaper relative to the gold price. Mm-hmm. They're so cheap now that there will be a massive catch-up. Now, the question I've got is it next week or is it next month or is it 6 months from now? But I think it's in that time frame.
Yeah.
And when it starts, they say the gold price moves up 30%, I think the stocks will move up 100. And some of the more speculative ones might move up 300 or 500.
Yeah.
So I'm not concerned in the longer term. I'm irritated in the short term because it's totally, it's a market that's not reflecting reality.
Yeah, as money managers, though, we're always frustrated by something, aren't we? Yeah, the markets never make it easy for you. And you have to have patience sometimes, and I think this is...
Well, that's what I've been preaching, you know. I mean, to a lot of people at this conference, because a lot of these individuals here are good, solid citizens, and they're heavily invested in these stocks, and they're hurting. But a lot of them, when you start looking, if you see higher prices, I mean, the cash flow impact is going to be so significant positively that people will have to go there, and it's just a matter of time. And then you've got all the shorts that are going to have to get covered. So I mean, this is why it's going to be really explosive.
Yeah, well, you know, I've sort of been watching on the XEU because I follow that more than the Huey. But the XEU, I've been saying, you know, once you finally break above the, say, the 230 area, you're probably off to the races. Would you say there's an equivalent level on the Huey that you're watching? That's
yeah, 600. I would say if you break through to new highs over 600.
Yeah.
And I was strengthened my view when Jim Sinclair agreed with me yesterday, because he used that exact number.
Yeah.
But I think that's inevitable, and I think I think it moves to 600 to 900 very quickly once it clears 600 with some gusto.
Yeah. Just turning to the sovereign debt crisis and debt downgrades. When's the UK going to get downgraded? You know, are there going to be more downgrades? It seems inevitable, right?
I was just reading one of the local newspapers this morning, and I mean, I think the UK situation may be more desperate than the US situation, and nobody seems to talk much about it.
Yeah.
So yeah, I would think. But to me, it's just a matter of the dominoes falling, because you can't look very closely at very many of these countries without seeing that they have a debt problem that's insoluble.
Yeah, yeah. I guess to a certain extent, because it's all unfolding relatively slowly, you know, sometimes people don't really see the trends that are occurring here. But, you know, this is a trend that's well established, and, you know, you use the term dominoes. The dominoes are indeed falling, even if they're falling slowly.
Well, you know, we're just talking at this moment just after the U.S. downgrade. Maybe that's the thing that tips the whole thing. I mean, it seems too obvious.
Yeah.
But I've often thought that whatever sort of set off the next global financial crisis too in a big way is probably something I haven't even considered.
Yeah.
But the fact is that this globalization that everybody sort of talked about in positive terms for the longest time, now we're seeing the negative side, because everything's so interlinked that if one starts falling, it's going to start pulling everybody else in with it.
Yeah.
And one subject that I'm more bearish on than most people is I don't think the Chinese miracle, which is necessarily, you know, can be maintained without some hiccups. I mean, let's face it, the U.S. dominated the 20th century, and they went through the entire decade of the 30s. I mean, I don't have any problem with the Chinese being the power, and I believe they will be in the forthcoming century. But that doesn't mean they won't have a real hiccup too, because if you look closely with their debt issues and a number of things, they're not without fault.
Yeah.
And everybody seems to just cling to them as, you know, if we've got all these problems in the West, we can always got China to sort of pull us through. And I'm not sure that's true.
One of the key foundation points of the Austrian School of Economics is, you know, the allocation of capital.
Yep.
And one of the elements of that is that you know, a private individual will always allocate that capital more efficiently than the government could ever hope to allocate capital, largely in part because the government is looking for political considerations and not bottom line.
That's absolutely right.
And the bad part about that is that capital is so hard to accumulate, and it is relatively so scarce, that to waste capital in that way, you know, through government allocation of capital, it's totally outrageous.
Well, if you look at the Chinese situation, I've always enjoyed Frank Benaroso's work on the subject, and he's always pounded away at the unbalanced nature of the Chinese economy. It's so heavily dependent on capital spending and exports.
Yeah.
And I would say to some extent that might have been an inefficient allocation of capital, because they got massive overcapacity in a lot of these areas now. And the thought is, well, then they're going to just make a nice switch into domestic demand that's going to offset sort of the weaknesses in the other two dominant parts of the economy. And I think, yeah, ultimately they probably will, but it won't be smooth.
Yeah.
And so, but that's a good point. I mean, the Austrian model could be applied to China, and I don't think they're sort of any utopian world.
Yeah, no, I agree. John, any last comments you'd like to share with the viewers? Your last interview with me back in May was very, very popular, and I'm sure this one will be as well. Any final thoughts you'd like to share? My only final thought is that it's absolutely incumbent upon people to have some gold and silver and some gold and silver shares in their portfolio.
if the history's any guide, you don't need to have 100%. If you've got 20%, they'll probably go a long way in offsetting whatever else might be going wrong in your portfolio. And most people aren't getting that advice from their local investment advisor or broker.
Yeah.
And so I would just like to emphasize that it's important that you have a good exposure to gold and silver and their shares at this time with what's unfolding.
It's a form of protection.
Absolutely.
And likely to become very valuable given the uncertainties we're facing at the moment.
Well, if you go back and look at the 70s, which I think will be seen as a walk in the park compared to what we're going through now, if you only had 10% exposure to gold and silver in that era, it offset the losses that you were going in the bonds and stocks.
Yeah, and the other financial assets.
Yeah, so I would think I'd be a little more aggressive this time. I'd say 20%, but I mean that would protect you. And if you're sort of believe as strongly in this as me, you probably have 100. But I'm not going to recommend that.
Well, Eric Sprott, your partner, was saying 80%. So I guess it's really a question of subjective personal judgment.
Yeah. I mean, put it this way: the vast majority of my net worth is in these items.
Yeah, I think that's a safe way to play it.
Yeah.
I'm basically the same way. You know, John Embry, Chief Investment Strategist for Sprott Asset Management, thank you very much. It was a wonderful opportunity to sit down with you here today and have this opportunity to talk about the markets.
It's always great to talk with you, James.